in retail, you've been taken down the garden path, basically, when it comes to, I shouldn't even laugh about it because it's serious. People are losing money in instruments that have very little transparent volume. I get it, $3 to $5 trillion. I know, I was in the middle of all of that. But it's great, like I told you. It's an incredibly difficult and advanced market. Don't take my word for it. Go and check. There is not a single professional firm on this planet that will let you trade foreign exchange when you start. Okay? They're all, go and check for yourself. They're all going to get you trading the S&P 500, maybe if you're lucky, crude oil. If you go to a US firm, this is obviously if you don't trade individual stocks. I'm talking about futures markets and more, global composite things, and obviously individual products like commodities, crude oil and gold and so on and so forth. And then foreign exchange is obviously more like a grouped asset class rather than individual stocks. But so in terms of the speculative assets that we're used to seeing, S&P 500 is really the only thing they're going to let you near. S&P, maybe 10-year treasuries, basically liquid instruments, guys. That's it. Once you start getting below here, no, these are advanced markets. I'm going to let you touch them. And you've got things like the pound. You see me trading the pound. It's very advanced market. Aussie dollar and cross rates, forget it. There's no market. Be lucky to get a few thousand contracts trading in a liquid marketplace, right? Don't get it confused with the 3 to 5 trillion number you hear. That's obviously OTC. So my point is that these guys in a professional firm, they're not. So, by all means, if you want to become a treasury trader, go and do it. And if you want to trade something differently, do it. But pick from liquid markets. What's the advantage? Guys, I can see all this volume where? On my profile. And it means something. When you start going down here and looking at all this, I don't want to say the word junk because it isn't. People do make money out of it. But how meaningful is the transactions that we're seeing? And I'm going to talk about this a lot when I go to the FX section. And I don't know when I'm going to build that. Obviously, I'll build that at some point in the future. And I keep trying to tell people this and they don't understand. When I say, I've been watching the pound for over a decade and obviously I'm eyeballing a lot of this. Why? Because there's no volume. And I recognize that and I trade accordingly. You got guys trading indicators and whatnot on the most illiquid marketplace. Is unbelievable, right? So obviously I'm saying this with enthusiasm because I haven't shown you this, guys, before. And why a lot of people are like, why'd you trade S&P 500? Why'd you trade crude oil? Well, look, it's the number one market in the world in terms of liquidity. Okay, guys, it's the most transparent marketplace in the world, right? It's common sense. You've got to be looking at this market. You have to. Even if you go on and develop a career in a different asset, I'm not saying don't. If you want to go and trade FX in a few years' time, you want to trade something else, do it. But learn how to read the market and what it's telling you on liquid marketplaces first. And I'm going to talk about this in that reality check, but don't take this the wrong way. I hope you see I'm trying to help you. If you can't trade successfully on liquid marketplaces, honestly, be honest with yourself. What hope have you got on illiquid marketplaces? Very little. I'll be honest with you. Never seen it in my life. It's not going to happen, in my opinion. So I hope you can see why I'm saying all of this, because I don't like to just say to you, yeah, do you know what? Just trade S&P, is the best. Trade crude oil. Believe me, it's the best. No, I like to show you evidence. That's what I'm trying to do, guys, is really, back everything up, I say, with hard evidence. And here's the hard evidence that they're the most liquid marketplaces in the world. So you've got crude oil there, and actually crude is now approaching close to 1 million contracts a day. It's even jumped up, and so that's why I only look at those two markets. Like I said, you're welcome to look at other liquid marketplaces, but please, whatever you do, don't start looking at all of this stuff. You're just going to find it very difficult to learn anything. Just my opinion, professional opinion, is focus on the S&P, treasuries if you want, or crude oil. Fantastic markets. And just recognize, like I said, obviously crude oil is quite volatile at the moment. step away, focus on the S&P. When volatility calms down, get back on it. The S&P has its volatile moments. You've got to recognize when to take your foot off the gas, and those are things we can talk about later. But I just thought it was important I said this, because going forward I'm not going to be talking about any other markets. I will obviously try my best to build some sort of cohesive or coherent FX section, but I haven't done that yet, so I don't know. Obviously that's going to be quite difficult given the way that I trade it and these issues in liquidity, but I'll certainly put something out there. But at least for the foreseeable future, with this particular profile section, it's just going to be S&P 500 and crude oil, and it's backed up by this evidence. So basically what it is so that's got the initial, and it was important I said that because I'm talking about volume there, right? So what it is look, there's certain things you can find on Google, and there's no point me talking for a long time about that, but stuff like this, it won't be obvious to you. But things like RTH and ETH, you can Google it. And even stuff, obviously, market profile theory. So what I will do is, obviously, I'll try and keep it as to the point as possible. And if there's anything maybe you felt that you want to learn more about, I even said in the last session, Google everything anyway, but this in particular, you Google it, you find some great info out there about this. But essentially what it was is, a long time ago, everything in the futures market was traded through a pit, right? So the CME had a pit for oil, for all different types of futures, obviously. And essentially what it was is, these were physical marketplaces, okay? It's called open outcry. So, you may have seen it in the movies where you get all these guys in the yellow jackets or whatever screaming and shouting at each other, and these were essentially floor traders, market makers, guys, and they had pit hours, right? So that's essentially what RTH is, regular trading hours. So for the S&P futures pit, the hours was 9:30 to 4:15 New York time, which is 2:30 to 9:15 UK time. And for crude oil, it was a shorter session. So it was 9 in the morning till 2:30 Eastern, so New York, and which is 2 p.m. to 7:30 GMT. So you couldn't trade outside of those hours until obviously later on they introduced Globex, the electronic markets, which you see today. I said it's done through an exchange electronically. That wasn't available before, when there were only pit trading many years ago. And so, like I said, you can Google all this stuff, but essentially what happened is, you'd have to obviously contact your broker. The broker would contact, I believe, an order clerk on the actual pit. The order clerk would then let the floor broker know that you wanted to trade. The floor broker would then they'd obviously trade with each other and get your order executed. That would then be fed back to the the order clerk. The order clerk would then tell your broker, the broker will tell you. So you can imagine this process maybe take 5-10 minutes sometimes to do. And again, you can read more about this if you want in your own time. So then obviously as technology improved, they introduced electronic markets, and they said, you know what, we're going to essentially trade 23 hours a day. So is 6 p.m. to 5 p.m. So you may notice on your depth of market, I believe about 5 p.m. it just switches off. 6 p.m. it comes back on and resets. That's Eastern time. So it's 11 p.m. at night through to 10 p.m. UK time, GMT, and it's the same. The electronic trading hours for the S&P are exactly the same. So it's pretty much 24 hours. Obviously, you've got the 1 hour period, maintenance period, they call it. So it's essentially a new day starting. And what happened over time is, obviously, electronic people started to think, you know what? It's such a, that sort of difficult process, an onerous process doing it the way that I just described, as you can imagine. Why don't I just click a button? And so what's happened over time is that, it's almost become redundant, the pits. And I believe recently, maybe 3-4 years ago, the CME shut majority of the pits. I think there might be some open, but obviously these products, the pits were closed down, and so now it's fully electronic. However, the reason I told you all of this is because rather than having open outcry, they now have electronic open outcry. So the pit hours are still very much active and observed and adhered to, but they're just done electronically now. And what I've observed, again, don't take my word for it, is great exercise for you guys to do. And I noticed this myself when I'm watching, you know, I built you that quote board. You'll see in the mornings, so if you're in the UK, obviously this won't happen till about 2:30, but from 11 at night, when you, let's say, so what I do is, let's say you start observing S&P or crude oil when it's about midday, or earlier, obviously 7, 8 in the morning, if you're in the US, New York or Chicago or whatever. Just look at the volume and you'll see that once the day kicks off, just look at the volume just in the RTH, and what I've noticed is it's about 80 to 85% of all volume takes place here. So let me just get rid of this, just so I can be very clear with what I'm saying to you. This session, which is the pit session, it's the electronic open outcry. It's called the pit, basically, session, but it's all electronic. So don't worry, you don't need to put a yellow jacket on and start screaming and shouting your order at someone. It's none of that. But it's essentially mimicking that, but electronically now, like I said, because they've shut the pits, but they've obviously maintained the pit hours. Yeah, so let's say you get maybe 15% of volume here and you get 85% done here. It's amazing, isn't it? So, you know, in such a short period of time, especially if you think of something like crude oil, where you've got, so 85% here and 15% here. Obviously during volatile periods, you know, like when there's key fundamental events going on and people have positions or they're asleep and they're being stopped out, which can happen in volatile markets, you will see the overnight. It's also called the overnight session. This is called the day session, essentially. Day. Okay, and this is called the overnight, and that's overnight. And you hear me and many professional traders use these words interchangeably. ETH, Globex, which is the CME's name for the electronic trading hours, overnight, because it's overnight, right? You're sleeping during these times. And then the day session is, you've got to remember, these are American markets, so obviously they're thinking in terms of daytime, 9:30 to 4:15 is very much, and it kind of also is very much in line with the underlying, because the S&P 500, if you're used to trading any stock trackers or whatever they are that you trade, obviously this tracks essentially one for one with the underlying, which is the S&P 500, but obviously this runs 24 hours. But like I said, there will be people trading it overnight, but it's very, very low volume. You know, you're talking about 15%. So, and I will tell you why this is very important, especially for profile. But the point is, what I was saying is, if you think about it, it's amazing, isn't it? That essentially almost the entire volume takes place in the pit session. So, you know, a few hours in oil, 9 in the morning to 2:30, done, about 80-90% of volume. The rest of the time, so what's that? That's about 5.5 hours. The rest of the time, what, 15, 16, 17 hours, really very little volume. And same as you see here in the S&P 500. Obviously the session's slightly longer, but 90% of the volume is essentially being done in what? About 30% of the time. So why is this important? Because very, very, very important to know this. Firstly, obviously you got to know it, because you've got to know, okay, what are participants focusing on? When should I be active? Well, I'm basically active. I'll be honest with you. I don't really trade overnight. 15% of volume. I got no interest in trading the overnight session. I want to be active when the local market is active, right? Makes sense. So that is obviously I'm based in the UK. So I like to do a bit of FX in the morning, as you know, but like I said, that is an advanced marketplace. So my suggestion would be, obviously, I don't necessarily want you to do FX until later on in your career, but I understand people are so used to doing it, they want to keep busy, and as long as you're doing it on demo and doing whatever, I'd prefer you weren't doing it if it was technical analysis stuff and whatever, but if you've got to do something to keep you busy, do it. Otherwise, do other stuff. What this is obviously if you're depending on where you're based. If you're in the US, great, you're lucky because you can just wake up and straight away you're hitting these markets, you know. So I like to look at them about half an hour before the open. Obviously, I do my prep. We'll talk about this a lot more as we progress. Times to do prep and stuff like that. But essentially, I like to start being ready for trading on the S&P, say about 9 a.m. So half an hour before, and about 8:30 in US crude. So that'll be about 1:30 UK time, and say about 2 p.m. Now, what will happen is over time, my prep time used to take hour and a half. I'm embarrassed to say, but it's true. It doesn't take me anywhere near that. Now I can 10, 20 minutes I like to spend on it, maybe a little bit longer, depending on obviously how well set up the market is. If there's a lot of things that are unclear, then obviously I will take a bit longer. But my point is, but guys, you've got to remember, I've been looking at these markets for, many years, so I have reduced my prep time. But when I started, I did used to spend at least about 45 minutes, maybe an hour prepping beforehand. So my suggestion would be that. So can you see why I'm doing this? Because I want you to be motivated now, because I'm already starting to get you geared up towards how you can start preparing for trading these markets. This is not by any means set in stone. If you want to trade obviously just afternoon sessions in the S&P, you can do that. If you've got work or you've got other commitments, it's fine, it's not a problem. I'm just telling you how I do it, okay? So I don't want you to worry and think, oh my God, I have to do it at this time. No, not at all. There are occasions, sometimes I'm running late, I've got obviously something on, or very rarely, but it has happened where sometimes I don't make the open, then obviously I'll trade a bit later. But this is an ideal world. I start to approach my trading day about an hour before I want to actually be ready. So if that's 2 p.m. here, then obviously say about 1 o'clock in the afternoon UK time for S&P, and maybe about 12:30 is, I would suggest, UK time. You can start looking to get ready for about half an hour before. So about 12:30, 1 o'clock kind of thing. And then obviously the equivalent here would be, if you're in New York, so 8:30, so about 7:38 you start doing your prep, etc. And then obviously you can adjust these by about 30 minutes later if you want to be looking at S&P 500. And obviously right now S&P 500 is a much better market because, like I said, oil is very volatile, but it will change. Markets change, you adapt. There'll be, again, oil will become a very good market to trade, and I wouldn't be surprised if that happens in the very near future. So don't know how much we're going to be doing of each, but at least I can tell you categorically those are the two we're going to be focused on. So that's the reason why I'm so focused on those markets. A, and then B, why I look at those times. So I hope you understand why it took so long to explain that, and you got a real good feeling now. When I say to you guys, RTH session's about to open, RTH has this, RTH is doing that, ETH is doing this, overnight session has done this. So when I say overnight, I basically mean what's been happening pre the market open. So get used to this terminology because I'm going to be using it a lot. But why is it important for profile? Well, it's absolutely crucial because what it is, and every single professional that I have ever worked with, that I've ever known through other professionals, that I've observed, that I've come into some sort of contact with, this is how they're looking at profile. What do I mean by this? As in, sorry, not market profile, but as in this timing. Sorry, I should have been more clear about that. RTH. Okay, so their profiles will not be a 24-hour profile, okay? It will only be regular trading hours. For the day, for the week, most people are looking at the full week. And that's because there's big gaps. I know it gets confusing, but look, it's just something you're going to have to get used to. To me, it makes logical sense. If it doesn't make logical sense to you, you can always ask me, but to me, it's logical that obviously for a whole week, because you've got these big gaps, and I'll talk about this a little bit more, you want to see profile for the whole week, all hours during the week. But when you're looking at a specific day, 85% of the volume is just taking place in this little zone on the day. And that's why you want to look at it from here. And honestly, there's also practical perspectives for that. Firstly, it's 85% of the volume, right? And I'm going to show you on the next page. What I'll do is let me go to the next slide and it'll make a lot of sense. Okay, so what I've got here is I've got RTH. Okay, now this is actually crude oil, but don't worry, it doesn't matter what market this is. It's not the point. And this is ETH, which is a 23-hour, as you know, with the break, right? This is RTH. So obviously this is from 6 to 5, and then this is just 9 to 2:30. Look at the difference, guys. It just makes no sense. Look how huge, these are the identical profile. Look at this. Nice small profile telling you 85% of information, right? Which, let's be honest, is about, in terms of space, I mean, it's that. To get what, 10-15% of extra information, you're almost having to look at double the profile size. It's impossible. It's impossible to do any meaningful analysis on this when you're trying to look for areas of, let me prove it to you. Would you agree? Balance. Do you remember? Balance, imbalance, balance, imbalance. If you don't, go back and remind yourself of balance and imbalance. Right? What have we got here? Got some balance. Market becomes imbalanced and does what? Achieves balance here over 2 days. Right? I can't even see that here. Look, let's be honest, it's a mess. You know why? Because look, this has got, and I'll come on to market profile and what it means, obviously, but you can see here the A period. This will make sense. Don't worry, I'm going to cover this. B, C, D, E, F, G, H, I, J. Essentially, it's a nice period, and look, you can see very nice balance. And don't forget, this is almost 85-90% of the volume. This equivalent is, look at it, right? I mean, this is why I think it's important for me to show you. I don't want you to take my word for it. I like to show you. Look at the balance here. Can you see it distorts it? You got a little bit of balance here. You got balance here. I don't even know. Was that overnight? Is that only the 15%? Is this the 15%? Do you see what I mean? It's a mess, basically. That's why I never met a market professional that combines overnight and the RTH. It just doesn't make sense to combine the two. And in fact, this is, I'm going a little bit off topic here. This is one of the big problems with FX. There is no RTH. It's global, and that's why, potentially you can use market profile, and we'll look at it. I've got no problem with it, but you can see why I prefer to just do it by hand when I'm looking at FX. Obviously, that's something you're going to have to come to terms with, and I can help you develop that maybe. But my point is this: can you see why? If you can't build edge using an RTH session where you got a clearly defined pit session with 85% of volume and an absolute beautiful transactional structure, how are you going to do it in an FX marketplace that is all over the place? And that is no exaggeration. That is what is happening. And there's no clear sort of, yep, this is regular trading hours. This is, so let me make my profile only this section and that's meaningful. No, it's all over the place. So, that was a bit off topic, but as a lot of you look at FX, and I want you to try to approach this with a level of professionalism and as a business, and you've got to make a business decision. There's a transparent marketplace with 1.7 million contracts. There's a clear regular trading hours. institutions are all involved, they're all looking at this stuff, or do I want to look at something that barely has 50, 100,000 contracts, don't even have regular trading hours, it's got a whole bunch of random players? Come on, guys, you've got to make a business decision now that, all right, do you know what? Let me actually learn how markets work in a functional and open and transparent marketplace using proper data ordered in certain hours, etc. You get the point. You know, I don't want to labor the point. I don't want to treat anyone like they're silly. I know you get this. And let me try and be profitable there. And then I can transfer that skill set. Why am I telling you all of this? Do you think this is Envy's rule? No, it isn't. Go to any professional firm. They will not let you touch, as I said before, FX for this reason. I haven't just made this up. This is my first-hand experience. You know, it's like, it was a bit eye-opening to me at first, but it's true. And you know, I mentioned to you that obviously I worked in an interbank environment and I had tons of experience in FX, obviously. But when I eventually moved on, and obviously I was doing stuff in a proprietary trading environment, you know, I recognized this straight away. So the majority, as you know, of my depth of market stuff, whilst I did a little bit of currency, and they allowed me to do it, obviously, because I had the experience, guys, the reality is everyone around me, they were doing S&P 500, crude oil, treasuries, okay? So, you know, at the end of the day, unless you've worked on an interbank desk for several years, when you go into professional environment, they're just not going to let you go anywhere near all that stuff. And logically, I'm sure you'd agree with them. It doesn't make sense. They want you to have a maximum chance of success. That's why they're getting you on these markets, RTH, okay? That's the profile you need to be using. Look at this. It's all over the place. You know, let's just look at... this to me just looks like one whole balance mush, right? Whereas here I can actually start to build opportunity. Look, you've got, and we're gonna do this, like I said, when we build contextual areas, is you've got a nice bit of balance here, and then the market comes out of it, and look, trading opportunity. Then what happens the next day? You've got balance edge here, you've got balance edge here, and look what happens. Market builds up and it goes up to where? The other side of balance. And then look, got balance here. The market actually opens out of balance, comes in, rejects it, boom, imbalance. Okay, what happens here? Overnight, you get this little move down, right? Which we see here essentially. And then, oh, sorry, here. And then, in fact, no, I was right. It is this one. You see a gap down, and essentially what happens is you open outside, there's a gap, and the market tries to fill the gap. Then what happens here is you open up here, we test value, and that gives us a rejection and an opportunity to go up. Look, at the end of the day, don't worry about any of this stuff I've been showing you. I'm going to cover this in depth in the building trading opportunities. But try building what I just showed you here. Very, very difficult, right? It's very, very difficult. It is, to me, this just looks like one big, balanced area. How are you going to find trading opportunities in that? You're not. And that is why RTH is so powerful, incredibly powerful, and why a lot of people who know me well know, yeah, I do FX, and okay, I'm very good at FX, and I mean that in the most humble way. I am, I know, the results show it. I'm going to be honest, I do trade FX very well, but this makes up 90% of what I do. Why? For this very reason. Even me as an experienced trader, you know, I'm using RTH and I'm trading the most liquid markets in the world, okay? You don't need to, you're taking unnecessary risk, in my opinion, and I hope you can see I've backed that up. So that's RTH versus ETH. Let's just go back to the previous slide and essentially just make sure that everything's covered. So yeah, we've covered the hours, which should make sense to you now. I'll just thicken up my pen, sorry. So we've covered the hours, which should make sense to you now in both crude oil and S&P 500. We've covered obviously the liquidity in each, and then we've basically covered why we're looking at slightly smaller profiles, because they're incredibly powerful, and obviously that's where basically the pit volume is, and that's where everyone's doing trading, and it allows us to create really nice information about transactions in a balanced way. The sort of bell-shaped curve, right, which I showed you, it does come back a lot as well to normal distributions and being able to identify balance in a nice way. What happens is when you put all that overnight data with it, you saw it, I showed you, it distorts it. And I forgot to mention that in the last post, but I don't want to get too heavy on the maths, but the reality is a lot of it also institutions realize is you can build these nice, it's called a Gaussian shape, but it's a bell shape essentially. And I showed you that the mathematics works beautifully when, and sorry, that should be straight, but works beautifully when we have symmetry, right? Either side, it's got the most useful mathematical properties in terms of, defining nice value areas when this section and this section is obviously nicely balanced. Makes sense, right? When I identify balance, where is balance, and identify the standard deviations when things are balanced. And that happens when you've got regular trading hours, i.e. most of volume. When you start introducing ETH into this, as you saw, it distorts this, and it kind of causes this to go out of shape, and as you saw, it can bring extra humps, and mathematically, I don't want to get into the maths, we've done enough maths, but it can cause problems. Because as you can see, when you start getting distorted distributions, sorry, just give me a second because I want to make sure my pen is. When you start getting these distorted distributions, as you're going to see, it's very difficult for normal distribution, for the statistics to make sense. It doesn't, because like I said, it's not evenly distributed. What actually happens is you start getting balance in two places. You get balance here, you get balance here. Okay, and that's because the outcomes, they're not evenly distributed, which means that, again, I'm hesitating to get into the maths too much, but obviously when you do the sums that I told you about, when you take the average variances and you square root them, the properties that make them sort of standardized, being able to compare from one profile to another, is no longer makes sense. It's not applicable, and you'll notice basically that what happens is with this, and look, don't worry, I will cover this again. I know some of you will be potentially, I don't know, maybe you won't be, but some of you will be thinking, what on earth's Envy going on about the maths here? But I'll be honest with you, it's important you at least ever so slightly grasp this, and I'll tell you why in a second. But so when you have a normal distribution that's evenly distributed, the properties allow for this 70% area in terms of standard deviation to be balanced and make sense from a statistical perspective. They're rigorous, but also they make them comparable. When you have these distortions, which means that the outcomes are not evenly distributed, unfortunately, the way that it calculates it no longer makes sense, because it's not giving you balanced value areas. What will happen is these will shift, and they'll almost try, basically what it will try and do is it calculates it almost as if it's like that. So what happens is you can have these value areas looking like that, right? Do you see what I mean? And it's not balanced. Because actually, if you think about it, what's the market done here? Sorry, and I know I've drawn it like that. It should actually be like that, isn't it? You see, you've got what's actually happened is it's balance, imbalance, and then balance. But you're trying to say that it's balanced. You see, it doesn't work, and that's where the statistics falls apart, unfortunately. And that's one of the reasons I use composites. So we're going to come back to that, but it's important I said that because it's one of the reasons why I use market profile, and we'll get onto that. But it's because the statistics falls apart. So maybe I'll recover that. But I think essentially what we've done is we've covered enough. Hopefully you understand now why I had to speak so much about it and why we're using regular trading hours, because I don't want anyone going away thinking, oh, I'm just going to use RTH because MB told me to. No, I want you to know there's rigorous reasons, very logical reasons why we use RTH, and obviously also the problems, as I said, with FX. And I'm mentioning that because I know many of you trade FX, and I'm trying to give you the other side of the coin, because I know you get fed, and I hope you don't mind me saying this, a lot of crap, right, about FX, and I hope you can now look at it, even without me, look at it, from that sort of independent perspective, take the evidence I've given you and make your own mind up for yourself, and hopefully you can reach the same conclusion that it don't make sense. What am I doing? Why am I even looking at this stuff that is not transparent, that has no trading hours, when there's these amazing markets out there that, okay, I don't necessarily need to start trading straight away, but at least let me attempt on the simulator to get profitable on, and maybe I can learn stuff that I can then apply to other markets if that's what you still want to do. All right, so what we'll do is I'm going to try my best to very quickly finish off just some of the market profile theory, and then we'll see where we're at. Okay, so I know I said we're going to look at market profile and the individual characteristics, but so you might be wondering what am I doing here, but as you know, I like to do things thoroughly. Let's have a look at why. Why am I actually looking at market profile? I think it's important that we establish that, because like I said, you might be wondering, hang on, we got this thing, volume profile, it's had us on the depth of market. Why are we even looking at market profile? Okay, so what it is as I was developing, obviously, like I said, and I got this understanding of, do you remember how I said all of these things can be combined, and this is almost like the depth of market split out? I think maybe it was because of my depth of market, obviously time, years spent on that thing, that it did get me thinking, because what you'll see is, and if I get a chance, I've got some training videos of one of the best prop firms in the world. They're not around anymore, but they've produced some unbelievable traders, and I've got some training videos, and you'll see, and I'm going to show you them. Hopefully I might, if I get a chance. I don't know how quickly I'll be able to do it, but I will at some stage definitely add them in to the pro section, and I want to show you how they look at profile, and it's how I was taught to look at profile. So what they do is they'll look at profile on a weekly basis and a daily basis. So to be fair on them, they look at profile on a day-to-day basis like this, exactly as you see here. So these are day periods on an RTH basis, okay? So as I said, everyone's looking RTH. So it's not like I invented RTH. They're all looking at it. Fine, I'm not doing anything different. But what I noticed was, you see how this is Monday? So this is crude oil, by the way. This is the current contract. I thought, you know what? Rather than showing you pictures, let me just show you on my chart. It'll be easier. You can see this is Monday, and in fact, let me just get a straight line. See if I can do this. See that Monday? Oops, don't know what happened there. Sorry, I apologize. Just give me a second. I've not used this before. Yeah, okay, so that's Monday, and that's Friday. Right? And then similarly here, obviously that's Monday, and then that's Friday. Okay. Now we'll get into this later, where we start thinking about, because what you got to remember, and something that I've kind of hinted on, do you remember I laid the seeds in the auction market theory section where I said it's all well and good this being a balanced market on this day, and there you can see the little value areas, by the way, these little things. If you zoom in, you can see them. So these are just the value areas which I talked about in the normal distribution section. Sorry, let me just get rid of this. It's all well and good, and you can see these are just little domes, right? Depth of market, so you can see them. These are just the value areas, so no longer do we have to guess, is my point. We've got them there, got them there, you got them there, okay, you got it there, they're marked for us. Okay, the software's just marking what? Do you remember? 70%, right? Sorry, my pen's gone a little bit funny. I think I've been writing so much it may have actually gone blunt, but that's all right. We'll sort it out in the next section. Apologise, very unprofessional for me to talk openly about this, but it is what it is. The pen has